Hi, and welcome to our end of April update from the Wealthy Doctor Institute, physicians leading physicians through finance. We work with physicians and other busy professionals who are not happy with their current investment strategy. We help them get this part of their lives handled so they can feel empowered and in control. I'm David Ye, and in my book, The Busy Doctor's Investment Guide, I show you just a few ways where just a few adjustments each year can help build and protect wealth. Although the strategies in this book are easy to calculate each month, for those of you who are new to the concepts of the book, or for those of you who are new to investing in general, this video will try to clarify what I do every month. Feel free to follow along every month until you get a hang of it. So for this month, we'll review their safety belt systems, then we'll review the momentum rotation systems on top of the safety belt systems, then we'll monitor the free sector surfer strategy that comes with any sector surfer subscription, and then remind ourselves of the rule for a stock tip strategy. Without further ado, we'll review our systems. Our first system is the 20-month simple moving average system, which I abbreviate the 20-month SMA system in my book. Think of the simple moving average as a safety belt for stock market investing. All we're trying to do is figure out whether or not it's relatively safe or dangerous to be in the stock market. If it's safe, stay in. If it's not, get out. Now remember, it's a safety belt. It does not guarantee against any and all losses. However, it does increase our chance of survival during a bear market crash. So the rule of using the 20-month moving average is fairly simple. All we do is calculate out the 20-month moving average number for this month. If the price of the S&P 500 index is above this number, it's relatively safe to stay invested in the index fund. Otherwise, get out. The 20-month moving average is our safety belt. It only works if we watch it every month. So here's a graphical representation of what we mean. So if the blue jagged line is the Vanguard S&P 500 Index Mutual Fund, dividend corrected, in other words, every time it spews out dividends and capital gains, we reinvest into the fund. The red line is our signal. Then anytime the blue line is above the red line, we're relatively safe in the markets. However, if the blue line goes below the red line, like how it did in 2000 and 2007 and maybe a couple more times in 2011 and 2014-15, we get out and we do not get back in until it crosses back above the red line. So this month, the mutual fund ended its price at $272.13 per share. The moving average went up to $249.34 per share. 272 is above 249, so it's safe to stay in the stock market at this time. And just to see how safe it is, we can make a quickie calculation, price divided by moving average, and we see that we have a 9.1% cushion. In other words, if by the end of next month the markets go up, sideways, or even goes down up to 9.1%, it's still relatively safe to be in the stock market now. However, if it crashes more than that, then it would meet criteria that the markets are dangerous enough that we need to get out of the stock market. So at least the cushion is increasing. If you remember last month, we were only at a 5% cushion. So this is Sector Server's StormGuard Armor. StormGuard Armor is Sector Server's version of the safety belt. And according to StormGuard Armor, we've been in stocks this whole month because it's been also safe to be in stocks. And we take a look at the actual indicator, it's still barely positive at 0.05%. Pretty much where it was last month. So it doesn't matter how positive or negative, as long as it's positive, it's relatively safe to be in the stock market. If it's negative, get out. Next system is our momentum rotation systems. Now in my book, I use a momentum rotation system as the main engine. No longer. Now that we have something integrated like Sector Server that can combine rotation system as well as the safety belt system, we now use momentum rotation systems as an adjunct to the safety belt system. Now in my book, the rotation system I described was called the MRI system. I no longer use this as described in the book. In fact, we even use a sector server version of the MRI using those same three funds, the S&P 500 Index, emerging markets, and inverse S&P 500 Index funds. And we do not even use that strategy anymore, just because it used to be with a pure rotation system. We're using the inverse index fund as our safety belt, and it did not perform as well as if we used an actual safety belt. So here's how I mean. If you were to take these stock mutual funds, and we're including various broad sector funds such as large cap, small cap, international emerging market funds, real estate funds, including a bond fund, and all we're doing is rotating using the sector surface strategy of rotation, yes, we can get this yellow line, which outperforms all the other components. However, if we were to just separate out the stock funds from the bond fund and rotate only through the stock funds when it's relatively safe to be in stock market, and rotate only through the bond fund if it's dangerous to be in stock market, then we can improve our performance like so. Now we get a much straighter line, trading only twice a year on average. We're decreasing overall risk and letting the winners take care of themselves. That's the strength of combining a safety belt system and a momentum system. Next system is a free strategy. Now, Sector Surfer, when you sign up for an account, yes, in general, most strategies you have to pay $10 per month for. However, Sector Surfer also comes with free strategies. They're not as optimized as we could have if we were to design them from scratch. However, they are free, so we can at least monitor these as well, just for illustration purposes, for purposes of this video. So with free strategies, usually Sector Surfer uses generic asset class funds, uses an older version of StormGuard Armor, usually StormGuard Acute Quick Response, and they do not separate out stock from non-stock funds for rotation purposes. So here's what happens. Here we have a free strategy called My ETF Asset Class Strategy. It has all these ETFs, exchange traded funds, which are basically mutual funds that trade on the stock exchange. And you have all these broad market asset classes trading maybe 3 times a year using an older version of StormGuard, and it's getting around 15% per year for the last 24 years. Back-tested, at least. If this is good enough for you, then go ahead and use a free strategy. Otherwise, you can tweak this and possibly do better. One thing I like to look at is when markets crash, like how it did in 2000, in 2007. How did the system do? Well, because it was in cash during that time, it didn't lose money, like so and here. Now, the next system we're covering is a stock tip strategy. Stock tip strategy rules fairly simple. If you absolutely positively must buy a single stock for some strange reason, which I do not recommend, but if you must, here's one way you can do it. Limit your risk to just 1% of your portfolio using any one stock. In order to do that, use 4% of your trading account to buy that stock, and then put in a 25% trailing stop loss order. If the stock goes up by 33%, then the trailing stop loss order has basically broken even. You can go ahead and use another 4% of your account to buy another block of stock. And remember, update your trailing stop loss order to reflect the increased number of shares. And just keep on doing this until you're finally stopped out. Eventually you will be stopped out. So in summary, this month we've covered our basic systems, including our safety belt systems, enhancing it with momentum rotation systems, even analyzed a sample-free strategy that comes with Sector Surfer when you sign up, and we went over our stock tip strategies. So keep those questions coming. I know I talked to several of you personally each month, and I realize that for some of you, these video updates are not enough, especially if you're still unhappy with your current investment strategy or lack of strategy. I'm going to offer a complimentary investment wellness checkup session for you, just you and me. Ask all the questions you want, no matter how seemingly basic or clueless you think you are. In our checkup session, we'll together create a sense of clarity about the financial future you really want, the reasons why you're investing to begin with, and how to get you there, discuss investment building blocks that are more specific to your situation, determine what has stopped you in the past from getting what you want, and identify what are the most important steps you need to take now to get your investment and financial goals. And then complete our consultation with excitement of knowing exactly what to do next to create that road on the future you really want. Think CME, only the topic is financial, and tailored to you. Think wellness checkup, because whether or not you feel financially well, if you had a financial cancer or blind spot you didn't know about, wouldn't you rather at least know now so you can deal with it before the problem grows and metastasizes? Don't be bashful reaching out. The more you delay, the more time is against you. So, until next month, invest safely.